Marty Eckerly is wondering what the outlook for Stantec STN looks like. Marty, do you have a microphone tonight? Should we chime you in, perhaps? Marty, I'm going to unmute you if you have a microphone.
Yeah, I do, Mark. Good evening.
How are you?
Thanks
for opening up your fine city. I know you and I didn't get to spend a whole lot of time, but we're coming back to see you pretty soon anyhow.
Right. It was a busy weekend, but it was very enjoyable.
What's your thought on this, Marty?
My reason for bringing Stantec up is because it's into the industrial sector, and we've only got a small portion of the industrial, and it's also a small portion of the portfolio. So that would be
one. So it could be one to potentially add to. Then you're saying.
Right.
Mm-hmm.
I haven't done an SSG or anything on it. I just noticed that. So
I'm just pulling up the Stantec value line report. You can see that the low total return forecast checks in at about 13. And coming back to the portfolio, it is only 2% of the portfolio. Let me hide some stuff on my screen. It's still up there. I mean, as far as a potential purchase candidate, some people had threatened or suggested that we might take a closer look at ACOM. That's ticker symbol ACM, a direct alternative, perhaps, to.
That's also a possibility. I agree that either one, ACOM would add something else to this. Would get us up to the 20. So that's what you want to. You don't want to get near either. So
typically, would want to be in a swap out position if we got into that. Anybody else have any comments or questions on any of the holdings? I'm going to pretty much assume, unless somebody objects strongly, that there isn't anything that's a screaming sell situation anywhere top to bottom.
Have you got an SSG on Stantec?
We can go ahead and pull one up if you'd like, Marty.
A couple years embedded into it.
Yeah, let's go ahead and do that. I think you can probably see that on your screen.
Yep.
I'm going to actually use. I'm still getting the harp music. Some others have suggested that it might be my wife upset with me or something. I don't know.
The Keystone sells more than Diet Coke.
That's right. We did see each other there, didn't we?
Yes, we did. Passing by.
And let's move this around here just to give everybody a quick look. Certainly nothing wrong with that picture in general. It's probably somewhat impacted by the recession there, but you can barely see it. Just for kicks, let's go ahead and pull in. I'm going to pull up SSG over here, value line page over here also, so that I can come back and embed. Let me just demonstrate. We're going to go and basically force it to accept the analyst estimates for year-end 2011 and 2012, so that we can make sure that this 19% on the long-term trend is pretty much intact. So I'm just going to go into data, I'm going to get rid of these first because they become messed up by the software. And then I'm going to come over to the annual data. And for the annual data, what we're most interested in is the sales situation, first of all. But kicking in 1,400 and 1,525. And while we're here, let's go ahead and put in the estimates for this year, end of this year, and next. I might be having trouble with my mouse here. That may be what I'm. Hopefully that's not showing up in.
You have a singing mouse.
I think I have a singing. I'm going to go ahead and lose one of these just in case.
Sharon says, "Do you have music streaming on your computer, or do you have a direct line to God?"
I think it's a direct line to harp music, and that's probably a dangerous condition, right? Goodness. All right, so what we've done here is for the year-end 2011, which we're coming up on pretty soon here, you can see that our earnings are behaving pretty well, so are sales. Again, as we look at this company at Manifest Investing, we may come back and actually take a look at a smaller amount of that data. Let me come back to this. You can see that we're actually using a growth rate closer to 11.9, and this is just something that I think many of you already know. A lot of times when we're looking at a company like this, we'll actually ignore some of the old line estimates somewhere out here. So I'm just going to throw 12 at it just to show you what it looks like. And Marty, I got to say that that looks pretty good to me.
I agree.
Somewhere in
the next 2 years looks real good.
You know, obviously anybody out there responsible for stock watching on Stantec, you would want to carefully, you know, wait for those 2013 numbers to come out here in a few months and make sure that they're still looking stable. But that's a pretty good picture. Nothing wrong with this company.
Ann Manning is saying they had a negative 7.8% sales growth from a year ago, and when they reported in June. And Gene Tinkin says they have a lot of debt. And Ann's got her hand up. So Ann, I'm going to unmute you. Ann?
Yeah, she might have to unmute.
Oh.
I appear to have solved the harp music. It was
okay.
A
Yeah.
USB port.
Okay, because I'm trying to understand, because I pulled up a toolkit while Mark did his, and my toolkit and yours look totally different. Because I'm getting from a year ago, they had 371.2 million in sales, and you're getting 303 or something. So I'm not quite sure why we're getting different amounts.
On the quarterly numbers?
Yeah. If you go up to the top of the, see, yours is 303, and mine shows 371.
From a year ago? Wow.
That sounds like some kind of massaging is going on.
You're probably not using value line. I use value line data for everything. I always take my SSG data straight from the value line investment analyzer. In fact, we're probably going to put together a workshop that can show everybody how to do that.
Okay, I just get mine from.
Go ahead.
I get mine from either Better Investing or iClub. So it's kind of weird that it's so different.
Well, if Value Line put in some kind of one-time write-offs, that would probably be the reason for that.
Yeah, it doesn't normally show up in the sales that predominantly, though. Again, I think I would look at it carefully and take a look at, in a nutshell, the best way to explain this is to say that the Morningstar data is going to more closely resemble as operating or as reported data, and it's going to have a lot more noise in it. I greatly prefer using the value line data in these situations. The other thing that I just share is just kind of a case in point. You know, I was a member of a number of investment clubs, and two things. I know how we teach this thing. I've been one of the teachers, and sometimes we place a little bit too much emphasis on the quarterly box. And just to put it bluntly, the box wasn't even on the SSG until the mid to late 1970s. So we basically operated for nearly 40 years without it. The other thing is when I was in those investment clubs with the gurus themselves, they never even filled it out. So that really speaks volumes about its relative importance to me. That doesn't mean you ignore it. I don't mean to suggest that whatsoever. But a lot of times there is some real noise in these quarterly numbers, and you have to be careful to sort through them.
I think what's more important is to focus on what kind of things they're talking about during the quarter, what kind of headwinds are starting to come up, what new expenses might be coming up. You know, so I think it's important to listen to the quarterly information and you know, the numbers are going to vary for a variety of reasons. It's a good idea to understand why they did. You know, if it happens to just be a quarter where that was when they're, you know, something peculiar happened that, you know, was for the year, but it all happened that quarter, then yeah, it's going to kind of skew things a little bit. But
well, it's interesting, but it's interesting because on my SSG, it shows it sloping down, whereas yours shows it going up.
Oh boy, I'd kind of like to almost take a look at this one in our forum offline, because it sounds to me like the Morningstar numbers are not pretty. And by not pretty, I mean perhaps inaccurate.
Okay.
Well, I wouldn't say they're inaccurate. They're probably the real numbers. They're probably the gap numbers.
It sounds to me like they're wrong.
No, actually, I'm looking at the earnings release. That's what it says too. Their year-ago quarter was 370 something.
Yeah, it's worth digging into a little bit closer. And the other thing is, Lori's right, especially with a company like this where they compete for what can be fairly good size lump sum single contracts. You know, you could have a situation where you lost 1 1/4 a year ago, or won 1 1/4 a year ago, and have that, especially in a year-over-year situation, really show up as something that really is not reflective of a long-term trend. And you just have to factor that type of information into your analysis. So all of that stuff has to be factored in. So we will take a closer look at it. We're actually going through and looking for companies where, looking for places where different decisions would be reached based on the data used. And it looks like we might be onto one here.
Sharon McAllister says Value Line reports Stanton in Canadian dollars, or Stantec in Canadian dollars. Perhaps.
That could be screwing things up a little bit, sure.
Yeah.
They could even be mixing and matching in some way. Who knows? That's where it comes into digging in. That's probably all the more reason to stick to one source once you have one.
Can you show the quarterly trend analysis on yours? Where you do select view?
Per day graph?
No, it shows all the numbers.
That would be at the per day, not the graph, but per day.
Now let's look at quarterly numbers. Here you go. Yeah, so we're looking there at it matches up precisely with the value line sheet. Interesting. It's definitely worth digging into. The picture there is pretty. Yes, Marty.
The Morningstar data does show 2008 with quite a dip in earnings, where you're not showing a dip at all. So there's a discrepancy there somewhere, a different method of reporting between the two companies. So that's
it definitely raises a question. What I think I would like to do is get the. Are you looking at the PDF report from Morningstar, Marty?
No, I'm looking at the front page of the SSG with the Morningstar data.
I'm actually looking at the data that they use in publishing their PDF company report, which is generally, I think it's generally more reliable than some of the data they kick around. And I'm not seeing any of this. I do see it as reported in Canadian dollars, as Sharon said, but I'm not showing the same type of disruptions here either.
What there's 63 cents showing for the 2008 earnings per share on the Morningstar, the SSG. What is
Can
on the
you
value
go back?
line?
Go back to your quarterly display data, Mark. I'll leave that up for a second, will you?
Okay.
$336.8. Huh.
Well, it's worth taking it offline and doing the comparison. And I'll also, when I do that, show the PDF of the Morningstar report, which is what I'd always turn to when I have questions about their data. and I find that a lot of times the numbers on their hard copy PDFs is actually different than what's in the data fields.
Well, it's interesting because the first and second quarter of 2011, those numbers are the same as what I have, but the three before that are totally different.
And we might also reconcile it against the consensus too, and see what the consensus looks like on Yahoo. Interesting to get into. We'll definitely tackle this as a case study and see what we end up with.
Well, I think if you're really curious, the best place to go is to the website and the investor relation and look at the earnings release itself. I mean, those are the real numbers.
Yeah, but they make all those up.
No, they don't.
They hire accountants to make those up.
They make up the pro forma ones, which is sometimes what you see in Value Line. But it's important to understand what it was they said was unimportant. I was just looking at the Oracle release that just came out today, and they throw around things being unimportant that are like perfectly legitimate deductions and should not be just kind of subtracted from or added back to your earnings.
Let's go ahead and go to Bill Thompson and see what's on Bill's mind. I'm going to mute you, Ann, and open up the floor to Bill. Bill, are you there?
Yeah, just on Value Line on Stantec, if you look at footnote D in the page, it says all amounts in Canadian dollars, data prior to 2011 in Canadian GAAP, thereafter International Financial Reporting Service standards, So there might be a change in standards in terms of the way they reported that.
Uh-huh.
Yeah, Canada adopted IFRS at that point.
That's a footnote in Value Line, the bottom of the page.
Yeah, that's what I'm showing. I think I'm showing that now. Is that what you're seeing?
Right. Down
but
there.
That should apply to both Value Line and Morningstar.
Yeah, I would think. No, it's worth digging in though. But yeah, Bill is pointing out a good place to go look for the adjustments, and again, it's going to most often appear as adjustments to earnings in that footnote A, is where they actually often will quantify. You can see there's a 76-cent correction to the 09 earnings in that A footnote. So that's just one example of a fairly significant adjustment made in the analysis.
Okay, the other comment I was going to make about not on this company, but on Apple, the size of our position, and are we concerned with that growing too large, and should we do something about that?
Well, Lori's not concerned. Yeah, with the 20 stock portfolio, which is basically where we're at right now, we don't want to get too far above 10%. Where's the 10% come from? It's 100% divided by 20, which gives you an average position of 5. Kind of it's not a hard limit, but a guideline. 2 times that average position would be 10% for a 20 stock portfolio. So if Apple were to go up to 20% of the portfolio, then perhaps we would look for, we would be vigilant for opportunities to perhaps trim that position at times. 12, I wouldn't get too concerned about yet.
Okay.
But it is something that merits watching. And again, I mean, this is the voice of experience. I was in a club that allowed a position to get up to 40%, and we took a massive haircut one time. It just does, it's a good company. I mean, but it can happen. Any other comments or questions at this point? Anything else showing up, Lori?
Laura Scott said she wants to know how you imported the data from the Value Line Analyzer, or if you think about doing a future webinar on that.
Yeah, I think we will do that. I use the Value Line Investment Analyzer. It's an option that people could consider. And basically, I have SSG data for about 10,000 companies there. And I greatly prefer the Value Line data over anything else. So it's something that I have great interest in doing, and probably will put together a webinar or a webcast where I can show people how to get at that and how to do it.
Gene Tinkin has a concern about how much debt Stantec is showing.
Oh, good question. Good question. Let's go up here and show the capital structure box. They actually have about $259 million in long-term debt. Their interest payments are about $10 million per year. You can see that by the long-term interest. They do have 29% of their capital structure in the form of debt. Let me take a look at what that effective interest rate is. All I'm going to do here is take 9.5 divided by, I'll just round it off to 259. That's actually an interest rate of about 3.7%. So that's pretty good debt. Pretty good debt. They do not have enough cash just to in their checking account just to write it off. This is an example of a somewhat capital-intensive business, or a business operating in what are generally capital-intensive industries, where they generally do carry some long-term debt. If you compare the peers, I think you'll probably find that. So again, the debt itself is a fairly low interest rate at 3.7%. At 29%, that's probably not terribly out of range for companies in this line of work. But this is, of course, a company that is capable of going bankrupt under the wrong conditions. So, type of company I wouldn't be too eager to hold if it was down in low single-digit dollars per share. Good question. But I wouldn't be concerned about it based on what we just looked at. Anybody else? As we rake the portfolio over the coals.
You know, there may be some issues of whether the data you're looking at is the restated data because of that IFRS changeover, or the original data, because of the changeover they had to restate some of the historical stuff, it looks like.
Mm-hmm.
So it probably depends on what your source is using.
Yeah, and again, you're into a situation where it probably makes more sense to lean even more heavily on recent history to keep some of those gymnastics out of it. For a company like this, I'd be almost tempted to just pay attention to 2010 and beyond. And again, when we form our estimates at Manifest, we do embed, in most cases, more cases than not, we embed the value line 3 to 5 year estimate in the number. So when we take a look at the portfolio online, we see Stantec. Let me jump to Stantec here. When we're looking at this company and we have this 11.9, that's a function. That's an output. It's a regression output, just like the stock study, the stock selection guide. And I guarantee you, we're placing much more emphasis on probably 2010, 11, and 12, and embedding the 2015, which is the 3 to 5 year value line estimate to arrive at that number. All in all, looks pretty good. Looks pretty good in general. And again, if their debt condition was terribly out of line with other companies in their field, we'd probably see that here in the financial strength. Their financial strength rating is 86, which is pretty close to an A+. Anybody else? We have about 17 minutes left. Does anybody want to make a motion to purchase something? We jump back to the challenge portfolio itself. You know, while we're awaiting motions, I'll just jump in and do a stock search. I'm going to try something a little bit different here, since my favorite mouse is barking at me here. If I go away, well, I'll see you next month. What I'd like to do is just kind of look for something that's not in healthcare or technology, so I'm going to choose all the sectors except for healthcare and technology. Let's look for companies in the sweet spot, so that'll be between 16.8 and 21.8. I prefer to stick to higher quality companies and higher financial strength ratings right now. You guys all like a lot of straight lines, so let's go with 80 there. And let's just see what that gives us for companies that might fit that description. So there are some fairly interesting companies on that short list. Again, we excluded any healthcare or technology. It would be, it wouldn't be a shame to latch onto a larger, slower growing company under these conditions. There's a couple of them there. But there are some interesting companies there that could merit some further consideration from outside the portfolio. So you see Stantec actually shows up as one of these inside the portfolio.
Oh, Dan Harnick says the difference for Stantec was $373 million was gross sales and $303 was net sales.
Interesting. I've never seen them treated that way.
Yeah, that's weird. I wonder what they're netting.
Anybody brave enough to make a motion?
Yeah, and Dan said the difference was due to the restatements because of the IFRS changes.
Okay.
So why then does? Am I still muted or
no? You're on.
Talking.
Unless you're talking yourself, we can hear you, Marty.
No, I was wondering then, why then so much difference between the Morningstar data and the value line data? That's puzzling.
I don't know.
On that 2008 year.
Well, Morningstar is reporting gross numbers and Value Line is reporting net sales numbers, which net sales is usually what you'd see reported. But also if Morningstar, if there was restatements and Morningstar isn't reporting the restated numbers, that would make a difference.
I guess we'd have to look at the Morningstar report to see exactly what's going on with that to make a comparison.
If they're changing over, you really want to look at historical data that's been restated, because that would be restated under the future system. So that allows you to then, you can't just extrapolate then from historical to new stuff. You can only extrapolate what's been restated.
That's why 9 times out of 10 I would argue for leaving it out at that point.
Well,
depending on how close it is to current.
It's important to understand why the numbers are different. I mean, if you're going to project future based on them, I think it's important to understand.
Well, that's why I say you leave them out, you're not projecting on them. Anybody see anything in the portfolio that we should accumulate? So, we could accumulate Stantec. We could accumulate NeutralTandem.
Sharon, okay, well, Gene Tegan says, asked about finding something in energy, but Sharon McAllister has also made a motion to purchase 200 shares of Stantec.
Okay, is there a second to the motion for Stantec? 200 shares of Stantec would take it to approximately 4% of the portfolio. We're talking about $4,600.
Ann Manning seconded it, and so does Nancy Cobb.
We'll be kicking it around, so this will be one we'll definitely want to get to the bottom of as we study it. Any other comments on it? Laura, you might as well go ahead and build the poll. Pull up questions and see. Nancy Cobb also seconds it. And I'm not seeing any other comments, so Laura, let us know when you're ready.
Yeah, I think I am ready if you want to do it.
All right, go ahead and launch the poll, I guess. I see the should we buy 200 shares of Stantec is already there from an old poll.
Yeah, I know we were looking at this before. Wait a minute.
Well, we added it last month, 200 shares.
Oh, okay.
It's down a tiny bit, but nothing major.
Okay, I've launched the poll.
All right, we have a few people voting. Again, if you're here as a relative newcomer, you're welcome to vote. If you're from Chicago, you can vote as many times as you like. Somebody vote for me. Lori and I are both unable to vote as whatever capacity we are, panelists or whatever.
Are you voting yes or no?
Oh, I'm neutral, but I mean, I like the picture I see on the screen right now. I'd probably vote yes.
Anne was wondering if the Angels told you what to vote for.
Turns out the Angels were a barking mouse, so I think we figured out what was going on there.
A barking mouse?
I had a bad connection on my USB port for my mouse.
And it sounded like a harp?
And it sounded, well, you know how the twanging sound?
Huh.
Hey, you should talk. You were wandering around the woods smelling smoke the other day. So.
It was there. It wasn't just me.
Oh, we're getting a lot of participation tonight.
Yeah, we got 87%. So I'm almost ready to close. It's your last chance.
Last call.
Last call, yep. I guess that's all the people that are willing to commit to this one. So I'm going to close, and then I will share the results. And it passed 65% yes and 35% no.
Okay, so that spends a fair portion of our cash on hand. We still have a little bit if anybody has